Ruben Roy is joining on the phone, the senior equity research analyst at the Benchmark Company. Ruben, welcome back to the show. This was a big report with big expectations, and the stock is almost suspiciously unchanged. So what's the market trying to figure out?
Yeah, hey, thanks, Oliver. Thanks for having me back. I think there was something for the bulls and the bears coming out of the report. Certainly some high expectations following Intel's blockbuster report a week ago, where Intel beat their guidance by $1.2 billion, most of which came from the data center markets. And so with AMD reporting sort of an inline print and an inline guide for December, I think some of those expectations on the bullish side weren't met. Having said that, for the bulls, AMD has some new server products out there. They've had very insignificant share in the server market for many years now, and they're starting to gain some traction. Those server chips were up 50% quarter on quarter, and they're expected to grow again double digits into the December quarter. So, for the bulls looking ahead to 2020, things could improve. I think the problem was that the company really didn't change their language on their market share assumptions. Still expecting to get to double-digit market share at some point in 2020. And so I think, it's probably a problem of management trying to stay conservative here, even though things look like they're going well, and I think that's being reflected in the stock this morning.
So, Ruben, to that point, the company, even though it really kind of led the semiconductor move this year before many others caught up, I've made the case that it doesn't really look like a semiconductor stock, judging by valuations, judging by some of the price action relative to its peers. So will those issues come home to roost if we don't get a more positive update soon to justify that valuation, or is the growth potential still here enough to trade above 100 times trailing?
Yeah, and I think for a lot of these stocks, folks are looking at forward earnings power. When NVIDIA kind of got up into the close to $300 range, that was certainly the case, with a lot of investors thinking that that company potentially could put up a $10 annual earnings number at some point in the future as data center continue to grow for them. And so for AMD, I think it's really about what their market share can get to in the data center / server market, and what their longer term earnings power could be. And so, I think that's the way to think about valuation. The question is, are they going to get the share that they think they're going to get in the market? Certainly Intel has some levers to pull. They've got much higher operating margins. They can play around with pricing. They've got some new chips coming out next year. So for me, it's sort of a wait and see with AMD. If I want to play this market and some of these higher growth companies in the sector, listening to a lot of these earnings call, one of the consistent themes has been that data center recovery is coming back. Intel certainly told us that, and Micron told us that a few weeks ago. I'm looking at NVIDIA going into their October quarter print. They're going to report in mid-November. I like that stock into year-end and into CES. That company usually does well into that trade event. And then you've got data center recovery continuing into 2020. That's the way I would play a higher growth semi-name at this point.
So you've got a neutral on AMD at this point. The relative strength to Intel has obviously favored AMD for a long time, but after that big blockbuster number, are you buying the market share narrative on AMD as much as some of the peers out there that are more bullish? Did Intel suggest that they're building some walls around their business?
It sounds like Intel, saw a lot of growth in the higher end of its data center server chip business. And, again, like I said, as you get into next year, when push comes to shove, if AMD gets sort of closer to that double-digit market share number that they're aspiring to, what will Intel's answer be? Gun to the head, if I had to pick between these two stocks, I would pick Intel, given that you've got a nice dividend yield. On the valuation front, I think you've got some downside protection because Intel isn't exactly expensive. Certainly some moving parts on market share, but I think Intel is a little bit of a better setup as you think about 2020, given how much AMD has run this year.
Hey, Ruben, last point. Usually avoid this analysts thinking about other analysts, but I'm just curious because the Citi analyst says this thing needs to drop like 60% on AMD. It's one of the most bold calls I've seen out there. Is there that kind of downside to AMD? Is it real a possibility that this company has a collapse like that?
Gosh, you're right. It's tough to comment
right.
on other analysts without some context on the call. But I would say that this time seems different. You've got a completely different CEO at the helm of AMD, and I think Lisa Su is doing quite a different job in managing the product roadmap. They're on a faster cadence of bringing new products out. They've changed their foundry partner from Global Foundries to Taiwan Semiconductor Manufacturing, which in my view is a much better situation for this company. So, profitability has improved. The company finally reached net cash positive coming out of this quarter. I don't see a scenario where you're going to get that type of sell-off in the stock, but in terms of upside catalysts, we're a few quarters away from really figuring out if AMD is going to pick up the share that they're going to pick up.
Okay.
So, at best, I think the stock kind of moves sideways until we get more visibility into that very, very significant dynamic.
All right, well, we got a sideways trade coming up. You're Ruben Roy. Thanks for playing ball with us as always. Good to have you back. Ruben, Senior Equity Research Analyst at the Benchmark Company. Tom, you've got a sideways trade in options. Tell me how to do it.
Ruben set me up nicely looking at AMD. He mentioned Intel paying a dividend.
Yeah.
AMD does not. Now, if you want to just buy the stock and get long, that's a way to play it.
Okay.
It does not pay a dividend, though.
Sure.
But I looked at a neutral strategy using options. Volatility's really gotten crushed here, Oliver,
Definitely.
after the earnings report, as we always expect. And what I looked at was just going out to the November series, so about 16 days from expiration, really short term, to take advantage of maybe a consolidation in these shares after that 80% run we've seen year to date. And what I looked at was doing an iron condor with the same common strike, that 32.5 strike. So sell a call spread to the upside, sell a put spread to the downside. And here's the setup where I bought the November 30 puts,
okay,
and I bought the 35 calls, and then I sell the call and put on the 32.5 strike. So it's an iron butterfly is what they sometimes refer to it as, because you're selling the same call and put at the 32.5 strike. That's your apex price.
Okay.
You collect roughly about $1.85 credit. Now, the stock's come back down right to that stock price, so you might get a little bit less, but anything over 160, 165 is fine. But on this example, you've got collecting a $1.85 credit. Your risk on this, because each vertical, Oliver, is only $2.50 wide, so your risk is only about 65, 70 cents on this particular trade, which is a good risk-reward setup. But you need it to stay in that range. You got a break-even of 30.65 on the downside, 34.35 on the upside. So a nice wide range for this thing to settle in. It's only a 2-week trade, positive time decay or theta, so that this thing contracts in price every day as long as it stays within those ranges.
So 34 is the high, so you're bound by the high basically, and then 30, look, you're basically hoping that the thing doesn't, devolve too quickly here, but it's only over a couple weeks. You've also got a bearish one, right?
Yeah.
You want to bet on downside, real quick.
Now, this is just in the November 29th weekly series on this particular trade, and what I did was that maybe we're not going to see any expansion in this price anymore.
Okay, you're selling calls.
Yeah, selling a call spread here. November 29th, so you go out 30 days, sell the 34 call, buy the 38 call to make it risk defined. If you're a little more risky, you can just sell the 34 call, but I like to keep things risk defined. You collect roughly about a 90-cent credit on that. That's with the stock around 33. It's come down a little bit. Maybe you don't collect 90 cents, but it's a $4 wide call vertical, neutral to bearish in stance. 34.90 is your break-even point to the upside, so you need to move about 6 to 6.5%, 7% higher from the current share price to get to that break-even. So you get nice probabilities in your favor, and you win in 3 out of 4 scenarios on a type of trade like this, where the stock can go down. You keep that credit, it stays where it is. You keep that credit, it rises but stays below that 34 strike, and you get to keep the credit. The only loser is if it rallies more than 7% from current share prices.
Not looking like it right now. Down 1.6%. So far, the low of the morning since the open. We'll be keeping an eye on it. Uncharacteristic for AMD to be so quiet after earnings. Okay, we'll be right back.